Welcome, everybody. It is now 2021, and we're back. We've got some of the original gang here. Welcome to the SMB series, where we're going to talk about PPP and stimulus updates as it pertains to round two. Appreciate all the work that the Silicon Slopes Impact Committee has done to prepare all this. We've got a great moderator, same as last year, Stephen Brown, who's the co-founder and COO of Ledger Gurus. Thank you, Stephen. Appreciate you taking the time to do this. And I'll let you introduce the panelists.
Yeah, so with me today, I have Megan Bronson, who's an advisory partner at Squire and Company, and Joseph Morgan, who's the VP of Strategic Partnerships at Continental Bank. So welcome and thanks for joining us with this panel today. We're going to dive right in as we have in the past. No time to mess around. If you haven't been on one of these webinars before, this is a very interactive. We want questions constantly, so feed your questions to us and we will try and answer them. We're going to try and go through a format. So the topics that we're going to cover are PPP forgiveness changes. There was a lot of changes that came in the December stimulus bill that are going to affect your Paycheck Protection Program forgiveness. We will then talk about the round two that was introduced, an option for certain businesses to be able to get a second round, the continuation of round one, and then we're going to very briefly at the end just kind of highlight some additional programs that we're not going to have time to go into, but just bring them to your awareness. So maybe before we dive in real quick, Joe and Megan, if you guys could just maybe start with you, Megan. Tell me a little bit what Squire is doing around the PPP so the team can understand, those who are attending can understand what your background is and what you guys have been focused on. Oh, you're on mute.
Certainly. We are an accounting firm here in Utah County in Orem, and then we have an office in Salt Lake as well. We have been doing a lot around all the different programs. We've been making sure to stay on top of as the new guidance comes out, whatever form it may be. We've been trying to stay on top of that and we've helped a lot of our clients do their loan applications. Originally, we've helped them do their loan forgiveness applications. Now we're helping them with round two forgiveness applications or round two applications. And then eventually we'll get round two loan forgiveness too. We have people who are expert in the payroll portions of all the credits that are going on, all the employer tax credits that you can get. And then we really are just here to try to help our clients. So, you know, as a client has a specific situation, we're diving in and seeing how the guidance, which is very general and tries to apply to as many people as possible, how it can be interpreted and applied to our individual client scenarios. So, yeah.
And then Joe, tell us about Continental Bank and what you guys have been doing around some of these programs.
Thanks, Stephen. Continental Bank is a small family-owned commercial bank based out of downtown Salt Lake City. We just have one sole office, but we do business in all 50 states across the country. We were very active in the first round of PPP and are active again in the second round. Since the bank was founded 17 years ago, we've been a preferred lending partner of the SBA. So we've always had very close ties to the SBA, even outside of these PPP programs, and have been a resource to a lot of small businesses here in Utah and across the country, and trying to provide a banking experience where we will, to some degree, hold your hand and give you personalized service as we help through this program, because as everyone has learned, you go to one bank and apply for a loan, you'll have a different experience and a different set of documentation requirements and different process than you would at another bank. So we've been trying to help all those we can get as much money as they can out of the program and help all of those who don't think they qualify become eligible. Yeah.
Okay. All right, let's dive in and start discussing the topics. So let's talk about, just make sure you can see my slide, PPP forgiveness changes. Okay, so let's talk about PPP forgiveness changes. There was a number of things that one of the first things that was, it was a big topic in the accounting community, that the PPP forgiven expenses, the IRS had come out and said they're not going to be tax deductible. That was changed with the stimulus bill. They got overruled, thankfully. So all PPP forgiven expenses can be applied towards tax deductions as well. So that's good news. Now, here's a good point. I'd love to get your insights, Megan. Everybody did a big celebration, but state tax deductibility still varies. And currently, Utah is not allowing PPP forgiven expenses to be deducted, although we have heard discussions that it may change this legislative session. What are you hearing? What are you recommending? I mean, what I'm recommending is what I put here at the bottom is like, hey, wait, you might want to wait and see, and every state's a little bit different, but what are you hearing from your clients and around state tax deductibility of PPP forgiven expenses?
Yeah, so actually got an update on this recently during the legislative session. They have already taken a vote, and I honestly, I don't know how official it was, but unanimously, they're not going to change this here in Utah at this point. So the hope and the discussions that we expected to follow the federal deductibility, that is now squashed at this point in time. So we do believe that you should be aware that Utah and then maybe other states are going to have you add that back into your income that flows through on your state tax return. So two things. One is your state following the federal rules, or are they making their own taxability on it? So that's one thing that could vary. The other thing that could vary is the timing. So originally the IRS was saying you can't deduct them if you think you're going to be forgiven. Utah is not saying that. Utah is saying you are, it's basically timed with your forgiveness. So if you receive forgiveness in 2020, then your 2020 return would show that add back of the forgiveness amount. If you receive forgiveness in 2021, you would have gone ahead and deducted all those expenses in 2020. And then in 2021, you're going to now have an add back to your income. And I guess there's kind of a third thing. The way they're characterizing it is it's an add back. It's not an adjustment to the expenses. So things like your research and development credits, other tax things that are dependent on the expenses that are deductible, those will stay intact. This is just going to be an add back adjustment on your state return for Utah. And
every state's going to be a little bit different. A lot of businesses have to file and for income they've received in other states. So definitely, have a robust conversation with your tax accountant, because this is something that will impact your return. On a good note, one of the biggest changes in the stimulus bill for forgiveness was the eligible expenses were expanded. The original expenses that were eligible were the payroll costs, business mortgage interest, business rent, lease payments, business utility payments. We can answer some questions here. We did a lot of this back, I think it was in July, Megan, where we had quite a discussion around this. But there's some new categories. I'd love to take any questions people have here. New expenses that can be used for forgiveness include key operations expenses, and software was called out very explicitly, but it also includes payroll costs associated with tracking this, property damage from public disturbances. So I think of all the, we were okay here in Utah, although some of the Salt Lake businesses might have been impacted, but any of the damages from the protests and some of the nonsense that went on, supplier costs, and then worker protection costs. So this is really, personal protective equipment, anything you have to do to prevent the spread of COVID. So one of the questions I would have right here, and I don't know if either one of you can answer this, like how broad, these seem pretty broad categories. Do we have a good sense, like let's take key operation expenses. How wide can I apply that? Is it like, I spend a lot of money on my operations. any one of you guys want to take that one? Like how well defined are these categories at this point?
I can jump in. One, they are broad. I agree. There are two things that kind of, I guess I figure we have a lot of time. Like nobody's going to be trying to get forgiven for these costs for several months before, you know, they have to receive round 2, spend all of that money, and then start achieving forgiveness in order for this to actually come into play. So as we learned last year, I guarantee you we'll have more guidance around these as time goes on. So that's one thing to consider here. The way I interpreted it was, in order to do all of this, you know, loan tracking and expense tracking and all the different things that went into it, it cost me a lot of time. I had to hire accountants. I had to, you know, all this time with the bank. I had all these expenses and people I had to do all this extra effort. And so it essentially, I interpret as these are things that I had to have to run my business and track my PPP stuff. And so that's where the key operating expenses are. So to me, it's like your overhead. You know, you already could do your payroll, you already could do your lease payments and things like that. So I see this as what's additional overhead that you have in the form of expenses and things. I would not think travel. I would not think meals, like those kinds of things would not be included. But the operating expenses that you have, and it, you know, that kind of extends it to include your overhead. That's how I saw it.
Joe, quick question for you. You guys have processed a number of forgiveness loans, and talking to Megan, we've seen different things from the banks. What type of information, documentation are the banks looking for, and what is the SBA looking for? And is it different? Like when somebody goes to produce a forgiveness application, what are you looking for, and what do you hear back from the SBA?
Good question, Stephen. Are you asking directly in relation of documentation for eligible expenses or just in general?
For eligible expenses.
Unfortunately, the SBA is, well, maybe some view it as being a fortunate lack of detail that the SBA has provided, but because the SBA has not given many specific examples of documents that are acceptable and ones that are not, it depends bank to bank. What we will say is that we're allowed to tell a story, and if you can document the expenses properly and it's verifiable and legitimate, we'll help you craft that story and we'll tell that to the SBA. So that's how I would paraphrase it. When we're talking about specific types of new expenses that are allowed, you know, software like cloud computing, those are okay. We've seen supplier costs that have been used, things such as like material, if you're a builder, or widgets or inventory even being okay. Again, this varies bank to bank, but I would say because the covered period has been extended to 24 weeks, both for this round and the last round, you're given way more weeks to spend this money than you were given weeks of payroll to spend it on. So all things being equal, I would think it's pretty safe to spend as much as you can on payroll and nothing else. You remember that at least 60% of the loan proceeds have to be used for payroll. But, oh, I apologize. I don't know if I'm on camera. My lights just went off.
So 60%, good point. 60% of eligible expenses do have to be in that payroll cost category.
Right. And because of that, we've seen a lot of applicants not have to worry about spending their money in other ways because they have 24 weeks to spend the payroll, but they're only given, right, a few weeks of that payroll to spend. So when we've been processing forgiveness, we've been hearing an overwhelming, consistent report that most times they're just being able to apply based off of forgiveness and they're not having to go find other eligible expenses. But when they do need to find room, we will stretch and we will allow pretty broad interpretations and different forms of documents to be included.
Awesome. All right. let's keep moving. So the process, and this, I'm gonna probably hit you up a little bit, Joe. Some of the changes they made, there was 3 forms, key forms that were used. One was changed, so they moved the 3508S from a $50,000 threshold to 150,000. This is a really simple form. The funny thing, I don't know about you, Megan, but I think we found that we still had to run a lot of calculations to determine what form a person could use. And by the time you ran those calculations, you might as well just submit the big form. But the second form is an easy form. So you have to meet some safe harbor. And we talked about that in July. The safe harbors was payroll reductions. You couldn't have, you couldn't, if you had that. And then the other one, remind me, Megan, the payroll reductions and what am I drawing a blank on?
So the FTE or the wage reductions.
Wage reductions, yep, those two. And then if you didn't meet that and your loan was really big, you could use the regular form. The other thing to be aware of was that for really large loans, you had an additional form you had to fill out. They're looking for some additional information and some scrutiny on those larger loans. Maybe let me start there. Joe, are you guys getting much scrutiny on forgiveness applications? Is there more questions from the SBA on the larger loans, or how is that working and function today?
Luckily, we view the forgiveness process as being a success so far with the SBA. The loans initially under 50,000 and now under 150,000 have been going through easily. I will say that this new form, the one that's for 150,000 or less that they increased, that has not been put into production by most banks that I'm aware of at all. I know many banks haven't been processing those yet because they, like we, are still waiting for more guidance on the SBA. But they're really quite simple. It's just a 1-page form where you have to make attestations. As long as you don't have any substantial revenue loss, or things like that, it's really easy for small loans. On loans over 2 million, we have not had speedy turnaround times from the SBA. We can get into the questionnaire if people would like, but that questionnaire is required for all applicants who borrowed more than 2 million. And that questionnaire, those have been submitted, and we have not seen fast turnaround times from the SBA in adjudicating decisions for loans over $2 million. And we believe it's largely because of that questionnaire, even though many of them have been submitted since December.
Gotcha. What are you seeing, Megan? You're working in an accounting firm, you're working across multiple banks. Anything unique that you're seeing that customers and companies should be aware of?
Yeah, two things come to mind. One is everything that Joe shared. We've seen the same as far as the timing, the turnaround time. It seems that the bigger ones are taking longer, and we have some that have been sitting close to 60 plus days at the SBA, where the bank's like, we submitted it, it's all good, but the SBA is sitting on it. And so while we see other ones that turn around in a week or two from the SBA. So it's kind of been an interesting thing that we've observed. But the other thing that I've noticed is that on those smaller ones, the Form 3508S, where, even back when it was just the 50,000, the banks were still trying to gather a ton of documentation, even though there really isn't that much required. And so we kind of have recommended that our clients just hold off. If they're in that smaller range, to just wait for the banks to catch up. Because, Joe, you probably can confirm this, but there's so much that has to be done from a programming standpoint to be able to handle all of these changes that are happening. And a lot of banks' portals have had to get revamped several times. And so that's something that I feel like we're still waiting on is that it's supposed to be a very simple process, but I haven't seen the banks keep it simple. I've had the banks keep it complex, and I'm waiting on that to catch up with the new guidance once it's all here.
Yeah, maybe talk a little bit about timelines. What is the Joe, what are the timelines that a business should expect once they submit the forgiveness application to their bank? What, walk us through the timelines that from submitting to receiving forgiveness. What's the max timeline that somebody should expect?
Of course. So to begin, the deadline to apply for PPP-1 forgiveness is 10 months after the end of your covered period. And the covered periods at first were 8 weeks, but you could opt into 24 weeks. So assuming everyone had 24 weeks, adding on 10 months from the end of that, you still have until later this late spring or summer to apply for forgiveness. Once you submit forgiveness to the bank, they have 45 days to process that and submit it to the SBA. And the SBA has 60 days to adjudicate that. Like Megan had said, we've had some come back in just a matter of, I think, 2 business days. We've had some approvals. Others have been, full 60 days about. It really depends, though, if you're using the easy form or now this one under 150, the 3508S. I know it ranges from bank to bank, but usually these forms do not take a lot of processing from the banks. As long as the applicant submits everything, calculates everything right, and most importantly, has all of their payroll records accurately uploaded, and they have done a good job in defining their FTE count, it's really quite simple for the banks to process these and submit them to the SBA. So I think, a few days for the bank, maybe a week, and then probably on average 2.5 weeks for the SBA.
Okay. All right. So let's move on. Next topic is PPP Round 2. One of the things that came out of that December stimulus plan was an opportunity for businesses to get a second round of Paycheck Protection Program loans. Quick thing on the eligibility. So we've got till the end of March to apply. There is some qualifications this round. So if you received a loan the first time, you may not qualify. The first and probably the most important qualification is there had to be a 25% reduction of gross receipts in a single calendar quarter in 2020 compared to the same quarter in 2019. There's an economic needs self-assessment. So do you need the funding? And they've lowered the size of company that's eligible. So Joe, I guess the first question I have is how the application is fairly similar to the last one. How is somebody, how rigorous is the process? If somebody went through it the first round and they meet these criteria, is it going to be a lot harder, or is it mostly self-certification?
Unfortunately, it will be a little bit harder than the first round. The first round was a lot of, attestations and good faith and different certifications. But this time around, we have to make 2 very detailed calculations. And the first one is that gross receipts reduction. We can get into the definition of what's included in a gross receipt, and we'll probably do that later. But we have to be pretty tight when we calculate that, and we have to have signed documentation from the client who is standing behind their reduction in revenue. The payroll calculations are actually a lot easier because you can use the same 2019 payroll that you received your first loan for, or you can use 2020, or you can actually just use the immediate past 12 months. That ends up being quite easy. But the revenue reduction, unfortunately, is cut and dry. You can't use any 3 months you pick. It has to be a calendar quarter in the calendar year 2020, regardless of what your fiscal year may have been.
Gotcha. Let's take, you brought up some good points. That what is gross receipts? That's kind of a weird term. You don't hear it used very often. So here's a definition that Megan, you provided to us. Essentially, maybe kind of talk us through what are gross receipts, Megan?
So this is how, it's supposed to be your normal, course of business, what do you call your sales? What do you call your revenues that come in the door? And so if you as the business owner have been, looking at your QuickBooks file every single month or every quarter for the last 3 years, what number do you usually look at as your gross receipts? That's the number that should be used in what you provide to the bank in this gross receipts reduction. It is not supposed to be something that is got all kinds of puts and takes. We want to make sure that it is just the things that you normally consider gross receipts. Now, it does say it includes interest and dividends and rent and fees and commissions, some of those things that people usually put down in their other income section. Some of that needs to come up and be included. And so there are a few of those things called out. And then they do allow you to, if you have returns and allowances, so if you're providing sales discounts or you have people who are returning your product, you are able to reduce that revenue number by those allowances and returns. So, yeah.
Some of the questions I've received from some of our customers, and Joe, like that 25%, that's a hard number, right? If you can't get to that number, like you were saying, it's calendar quarters, it's 25%, there's a little bit of interpretability here, but for the most part, if you can't show 25%, you're not eligible. Is that correct?
Correct. Yeah, we have to show to 2 decimal places that it's 25%. So it can't round up to 25. It has to be a minimum 25.00, and that's it. We've had some clients who, for example, just in the 4th quarter decided they're going to compare 4Q20 to 4Q19. And they say, well, actually, yeah, we closed our books, but we could actually defer, recognition or accretion of revenue or things, could we go back and adjust this? And we're not an attorney, we're not a CPA, we're bankers, and they have to attest, and they actually have to sign those revenue reduction documents, be they bank statements or tax returns or profit and loss, income statements. They have to sign those. So the banks are held harmless. At the end of the day, the borrower will supply to the bank whatever they want, and they're signing it, verifying that it's true and that it's accurate. And if what they provide to the bank comes out to be 25% or more, we'll take their word for it and we'll move it on.
I mean, that brings up a conversation around audits. Have you seen many audits, either of you? Have you seen any clients getting audited by the SBA at this point?
We have.
Yeah.
From round 1, we had our local SBA district office reach out to us, and they identified a number of loans that we had done in the first round. Neither of them had received forgiveness yet. I don't know if they had actually applied for forgiveness at the time, but we had to provide every document, including emails that we had on the client, both to and from the client, but also internally about the client. We had to provide an entire data dump of absolutely everything we had been given, seen, and heard of, and provide that. Luckily, both the bank and the client had buttoned everything up neatly, and the audits were clean. But from that experience, we learned that if we and the applicant had not been clean and truthful and accurate about submitting things, we're confident it would have been found.
Mm-hmm. Megan, you said yes as well. You've seen some. What are you seeing with audits for customers?
Yeah, shortly after the new forms, the 3509, the loan necessity form questionnaire came out, we had several get pulled that were under the 2 million mark, but they basically said, we're starting here, start filling this form out. And so they were kind of going at it from a necessity standpoint, like, did you really need this money? And so those all worked their way through. It sounds like maybe what Joe had was a lender-based one. I think it might be a little bit different. I don't know, maybe not. Maybe that was a normal SBA audit, but we didn't see that side of it. We didn't see all the requests. Like, as a CPA, we weren't asked for all of those emails and documentation and everything. So it is really the borrower and the banker that are going to be scrutinized in those.
Yeah, and I mean, I think, there's been a lot of PPP in some ways has become a dirty word in the media. And I feel like they've done a disservice because I feel like it has served a lot of businesses. But you read all those crazy stories like the guy who set up businesses named after Game of Thrones characters and, shell companies, and the guy who bought a Ferrari down in Florida. And it's just, so there, if you've got a tight, documentation, if you have legitimate need, you're going to be fine. But just be aware that you may draw the unlucky straw as you go through this. So you want to make sure as you're going into it that you're prepared should they come back and ask for additional information. Now, on the loan amount, some things have changed over the last time that they did round one. The biggest changes were the calculation. So they're going off of calendar years, which is kind of cool. You can pull 2020, you can pull 2019, or a 20-month period. You can also pull partial if you don't have a full year's worth of time. They also give you an option for a seasonal period. The other really great thing, so this is, again, it's a similar amount, 2.5 months, but if you are in a certain industry, so if you have a NAICS code 72, which is essentially restaurants and hotels, but you should go and look at your registration to see what your NAICS code is, you can get 3.5 months worth of payroll to calculate that loan amount. There is a lower cap this time. Before it was $10 million, so you could get some pretty hefty loans. They've reduced the size of the loans that can be given out. They've added the ability to include some additional payroll costs into the calculation, and you cannot use this if you got an EIDL. See if I can remember this correctly. Economic Injury Disaster Loan. If you had an EIDL loan, you can't refinance that with a PPP. So some good stuff. Maybe let me ask an accounting question, Megan. Like, what are the biggest challenges you're seeing in the payroll cost calculation as customers you're working with, companies you're working with are trying to produce those payroll costs? You've got more options to work with, but what are some of the things that people should be aware of?
Yeah, I mean, it is whatever's your most advantageous for you. There's not stipulations on which period you have to use. And so, the benefits of using 2019 and using the same lender is that they already have that data and they already vetted that data. So they should be willing to just move it along with the added information. But if you had more payroll in 2020, or, I mean, at this point in time, we're in February of 21 now. So the rolling 12 months would be February of 2020 through January of 2021. So now you're kind of looking at month, like, is your January 2021 better than your January 2020? And if so, you might as well do the past 12 months instead of doing the calendar year 2020. So those are things to consider. So you mentioned the seasonal, but this is a big change actually, because seasonal originally on round one was just that gap of like a year ago, like we're here hitting in COVID time and, March through June during all of PPP 2020. And so they're saying, well, go look at that same period of time in 2019. And that's what payroll you're going to get, because everyone was expecting that COVID would be long gone soon. And there wouldn't be a greater need. But now that there's been, obviously we're now here hitting a year, the seasonal people can now pick whatever 12-week period before COVID, so before February 15th, whatever 12-week period is their best payroll, and they can get it off of that. So that's a big change, and that can really benefit a lot of those seasonal, especially the winter months ones who were low payroll during the spring and summer. They can get a lot higher PPP loan this second time.
Joe, in terms of documentation requirements, is it basically the same things as round one, or is there anything additional that you're looking for when somebody applies for the second round?
It really is the same as round one. For payroll records, different banks are requesting different documents, but you need, whatever your 941s are, those quarterly IRS forms, or if you want to provide the annual 940 or 944, that's okay. You can provide W-2s or W-3s if you'd like, but a lot of that is overlapping data, so you don't have to provide all of it. The one thing I would say is you had highlighted it on this second to last bullet point on the page, these other types of payroll that can be included. You can include all of these things, and in addition to these things, I don't see things like the employer's portion of unemployment taxes. Those can be calculated in, as can pension, retirement, 401k type expenses. So if you've just been submitting, your 941s or your ADP payroll report, and it does not include these things, there's money being left on the table. So I'd ask your banker, hey, what else can I provide you? I know you've asked for this, but what else will it take? And there's not a definitive list of what can be and cannot be accepted. It'll be up to the bank to decide if it's reputable and if it's valid. And if it is, there's oftentimes a lot more that you can get than what you would assume.
Gotcha. All right, we'll keep moving on. So if a business did not receive a Paycheck Protection Program, they have also reopened the first round of loans. And just a recap on this. So if you didn't receive a loan in 2020 when they had that, you could, for whatever reason, right, you were confused or not sure, you can go and apply for that loan. You did have to be in an operation February 15th. A lot of the same rules apply. So there's difference. Round 2, you had to be smaller, but they're still using the bigger threshold for round 1, if I understand correctly. Can't be permanent closure and bankruptcy, so you can't use this as a last ditch effort to, save your business. You have to be in somewhat of a solvency state. They've expanded eligibility for the nonprofit space, so 501c6s, which often have a little bit of a lobbying arm. There are some very specific rules around what's eligible, but they have made those eligible as well. And you can't double dip. So there's another program, the Shuttered Venue Operators Grants. This is kind of some of the key points that are different, but a lot of the underlying rules are the same.
Can I interject, Stephen?
Yeah, go ahead, Megan.
One thing is this applies to round 2 as well. All of these things apply except for that first, except for the difference in employees in the first bullet point. Those things still apply on round 2. You still had to exist back then. You still have to be in operations. And the Shuttered Venue Operator Grants, this is something that's new. If you are eligible for that, if you file for any version of PPP in this round, it will make you ineligible for that. And the Shuttered Venue will cover briefly later, but that's a revenue-based thing, a much more lucrative grant than the PPP grant for most people. So just keep that.
Are you guys seeing many round 1 applications, like first-time appliers?
Not yet.
What about you, Joe?
We're not seeing many either.
Yeah.
There are a few, and particularly a lot of 501c6s.
Yeah.
But I actually admittedly learned today, you guys can correct me if you've heard differently, when you apply for the first round, you do not have to show the revenue reduction. Yeah. So a lot of people are saying, oh, I missed out on the first one, or maybe they're trying to be good citizens and they said, you know what, we didn't really need it, but now the business has declined and they're hurting. If they can't show 25%, that's fine. They can still get round 1.
Yeah, there was basically an attestation or that you had to make that said, I need this loan. And back in March, when everything hit the fan, nobody knew what the outcome was going to be. I think everybody thought our businesses are going to die. We're all going to shrink, and some didn't, some did. But I think that attestation was pretty, was pretty broad. Now, like if you didn't do it for whatever reason, you've got a lot of history under your belt. And let's be honest, there's still a lot of uncertainty for the remainder of this year. Like hopefully we'll be out of this chaos with the vaccinations rolling out, but there's still a lot of uncertainty that if a business did not receive one and they're on the fence, like I would probably say do it.
Yeah, I agree. For what it's worth, I heard Javita Carranza, the head of the SBA, say on a call with Secretary Mnuchin that they're not going on a witch hunt. They're not providing all this stimulus to try to stimulate the economy just to go find people to burn them at the stake.
Yeah.
If you attest to say, I need these funds, I personally don't think they're going to go after you. And I heard her say that the spirit of this is to help those in need. And if you say you're in need because you are, or you think you're going to be, we made this program for you and for your benefit, not to come catch you 3 years down the road and try to disprove your need.
Yeah, just don't do, like I said, the stories you read in the press, the fraudulent stuff, obviously don't do that, but like, don't use the money to go buy a Ferrari, right? You know, those type of things, those are the ones you see that are getting, and you kind of wonder, like, was there something else to that raised the ire of the SBA? But you know, those abuses of the program that are just blatant abuses, those are the ones that they're hunting down, right? They're trying to take down the people that are blatantly abusing it. But the way I think about it too is like, even if your business ends up doing okay, you don't know if it's what the next wave of economic impact is going to be. You don't know. You just don't know, right? And having that additional money gives, I think about it, if your business does fine, it gives you the confidence to stay in business, to keep hiring, to keep trying to grow. And the economy needs that just as much as they need to retain jobs for the businesses that are declining. So I personally think like it's good whether you're hurting or if you're not hurting but you're not sure. Either way, that money is gonna, you know, if used properly, can benefit the economy and benefit your employees. In terms of the loan amounts, it's basically the same as it was. The biggest difference is you can use those same calculations, right? And also we have the added benefit for the restaurants and hotel industries. On quick question on all these loans, Joe. Last year in March, it was like a gold rush. It was like 2 weeks and the money ran out, and everybody was like losing their minds. And then Congress came back and refunded it, and then the refund never ran out. It kind of went through July until they, and then I think they extended it to August, the application, and they never ran out of funds. We're a couple weeks into this next iteration of PPP programs. What's the fund level? Like if somebody hasn't, you know, obviously we haven't heard money running out, but what are you hearing? What are you seeing in terms of timelines for getting loans? Should people rush to get their loans? What are you recommending to companies that are trying to make decisions?
Good question. Well, it's not the same gold rush as it was at the beginning of last year. The SBA released some stats just at the very end of the month, 2 days ago. And as of 2 days ago, 73 billion of the 284 billion had been appropriated. Or in other words, those amounts had been approved. And once it's approved, it's earmarked and, you know, obligated to be funded. So that's roughly about 25% of the pool. So a few weeks into this, 25%, a lot of the quick, large money has already been approved. I think that there will be leftover money at the end of this. And if there isn't, I don't think that many people would disagree that this Congress and this administration would not supply more money if for whatever reason it did run out.
So go get it. You don't have as much of that pressure, but you know, also don't get caught in the gray area if you need it, right? Some businesses, if you're tight, you know, get it sooner. Quick question for you, Joe. Again, in terms of processing times, how are you seeing times? There was a lot of delays. The SBA was struggling getting loans processed. How quickly are you seeing loans for PPP round 2 or round 1? How quickly are they getting processed now compared to, you know, last year?
So there's two different time frames. There's the time period that it takes the bank to accept, review, process, adjudicate, and then submit to the SBA. And then there's the time for the SBA to decision that submission. Last round, all of that was just the bank. So as soon as the bank submitted to the SBA, they got a real-time decision, you're approved or you're not. This time, the SBA is doing a lot more reviews, and they're doing those manually. They've even hired third-party vendors, and they've outsourced a lot of this to like Dun & Bradstreet and others, where they're manually reviewing applications to check for fraud, bankruptcy, any criminal activity or money laundering or terrorism links, things like that. And because the SBA is doing these additional checks, it's taking them on average, we're finding 5 days to approve a loan. It has been as short as 1 day, and other ones have been submitted for 2 weeks and there's still no response. We'll get into this later, and I'm sure there'll be questions about it, but there are some pretty nasty SBA error messages that the banks are getting after they submit a clean loan. And the SBA has slowly been giving more information to address the errors that it caused and that it sent back to the borrower. But they have not released many ways for the banks and the borrowers to fix or amend those errors. So on average, our bank, from the time we accept an application, if it's a full clean application, we'll submit it to the SBA a few hours later. But it's taking the SBA on average about 5 days to approve it.
Megan, what are you seeing and hearing? You work across a number of banks. Same thing as Joe, or anything to add there?
Yeah, he's actually probably got a lot more insight there, since he does get to see the SBA side of that. And so yeah, it feels similar than before, because I think the banks have sped up their process. I think a year ago, the banks were taking a while, SBA was quick. And I think now the banks have figured it out and they've got their automation going. So the banks are faster, SBA is taking longer. So it feels pretty similar.
Awesome. All right, let's, we'll kind of touch on one more point, and then we'll take any other final questions from the attendees. There was a number of other goodies in the stimulus bill. It was a huge bill. Just want to talk about them briefly, and maybe Megan, you can help me. One of the things we haven't talked about on any of these webinars was the employee retention tax credit. And, there was a lot of interest primarily in the Paycheck Protection Program. So that's where we focused our energy with this webinar series. But there's been this employee retention tax credit as well. And they've made it eligible to Paycheck Protection Program participants. Megan, what is the employee retention tax credit? And maybe let's start there. What is that program?
Yeah, so basically it's a tax credit. So it's against your employer payroll taxes. It's not an income tax one. It's a payroll tax credit. And it was a program where if you had to be shut down, or if you had a significant loss of revenue in 2020, you could be incentivized to keep paying your people. And if you were a huge company, you had to pay them for not working in order for it to be eligible. But if you had 100 employees or less, I think it was the cutoff, you could still, your people could be working or not working, and the money that you're paying them would make it eligible. So basically, as you're shut down for, let's say you're shut down for 6 weeks from COVID, you pay your people during that time up to $10,000, you get a 50% credit back on their wages. And so it's a one-time thing originally, and there were all these limitations. And then they said, if you do that, you can't use those wages for PPP monies. And so people are like, well, I'd rather have those wages eligible for PPP. So most people ignored this payroll tax credit up front. With the expansions, now it's a limit per quarter, and you get more. You don't get 50% of it. You get a higher percent. I think it's 70% now of their wage. It resets every quarter. So if you have people that you're paying, and you have, who knows what's going to happen in the coming quarters, you can have this benefit multiple times. and it's retroactive. And so a lot of people should be looking at this and should be saying, okay, well, look at my 2020 activity. Should I have claimed this credit? And if so, what payroll forms, which quarterly 941s do I need to amend so that I can get my payroll tax credits back? It's not simple. It's not something you should try to do by yourself. Definitely engage your payroll provider or your accounting group to do it.
Okay. So definitely something to look into. If you haven't spoken with your accountant, this is something to bring up with them. The other one, there was a program called the FFCRA, and I can't even remember what that acronym stands for. I can't even remember it. It was one of the first programs. Maybe Megan, you can look that up. It was one of the
family's first coronavirus employees.
Family First Coronavirus Relief Act. Is that right?
Response Act.
Response Act. So this was one of the first bills that was passed last year, and I feel like it got over, like the PPP kind of took all the oxygen out of the air. Essentially what it was is it was a vehicle for businesses to be able to give sick leave for people who had been affected by COVID or had to take care of people who had been affected by COVID. And then they could pay for that by reducing their payroll taxes. There's been some changes. Megan, maybe just real quick, what are the changes that came with this? Maybe just give us a quick summary or add on to my overview, and then what changed with the December stimulus bill on this one?
Yeah, so last year you were required to pay someone who was like they couldn't come to work because they were quarantined or they were sick with the virus. You were required to pay them up to 80 hours or 2 weeks of their time. And so a lot of businesses got that put in their minds, and they did follow through on paying their people because the people were like, you have to pay me. So they did. But what a lot of them didn't realize is that they were required to pay them because they could turn around and get reimbursed 100% of that wage. There are some limitations, but basically 100% of that wage, you can offset your payroll taxes as a company. And so it is, again, it's one of those things that's very difficult to do on your own, but if you have some people who can help you through that, it's also something you go back and claim as well and say, well, I did pay these people. Why don't, I want to get this back now. And so anyway, so that is what it was. Now it is still there, but it's optional. You are no longer required to pay your people if they are quarantined. But if you choose to do it, then you can get reimbursed through reducing your payroll tax liability.
And this program continues. Is it my understanding it continues through the end of March?
I think it's June on this one.
June for this one. So this is a really valuable thing to take care of your team. And it's, again, I think it got lost in the PPP rush, but it's a really nice tool to take care of your team and not have to pay for it out of your business expenses. The emergency impact disaster loans continue forward. Now, Joe, my understanding is EIDLs are not done through banks. Those are done directly through the SBA. Is that correct?
That is correct. Bank has no role in that. It's solely administered by the SBA.
Yeah, which in our experience has been kind of a harrowing process. Like having banks as the middleman has actually made the PPP work really well. I don't know about you, Megan, but I've seen a lot of EIDL struggles. What have you seen around the EIDL? And for those who are thinking about applying for these, maybe first off, what is the EIDL?
Yeah, so it is a program that's trying to help. It is a loan. It is not a grant. So it is a loan that is trying to just help you get through it. And so you had to show economic impact, like a loss in revenues. There wasn't a threshold. And so that's one of the biggest things about this whole EIDL is that it's not cut and dry. It's almost like, well, you submit all this information you say, well, this is all the payroll costs. Here's all the things that I've done, or that I will have to do to keep my place safe for employees to come to work. Here's all the things that I've done that I have to have for operating. And so it's a broader net than PPP monies, which is tied to mostly wages, but it is still there. It's not a guaranteed, there's no calculation there. You say, this is all of my information, and then they give you a number and you get that number. And it's a loan that has very favorable repayment terms, with, I think, some delay before you start paying. And so I have very few clients who made it through this process, because it was one of those where they opened it and then they shut it down right away. And then they opened it and then they shut it down right away. And they said, well, only the people in this industry can now apply. And so I think they've worked through those kinks. And so now I think pretty much anyone can go, not pretty much anyone, but it's more general who all can go apply for this. But it is still overshadowed right now by PPP. And most people are not paying attention to this one either.
I'll just add quickly on EIDL. I know they've replenished the funds for that, and the program is working, and I've heard good stories about it. So you can go directly to sba.gov and apply for one if you haven't got one already. But what I wanted to point out is there's an EIDL loan and an EIDL advance. The advance is just $10,000, and banks were directed to actually take the $10,000 EIDL loan that the SBA had given to a borrower, lent to the borrower, and they were directed to take that $10,000 out of the forgivable portion. But now the SBA has changed their mind, and they're actually forgiving that $10,000 EIDL advance amount, and they're not taking it out of the PPP forgiveness. So if you were one of those who got the $10,000 advance taken out of your PPP forgiveness amount, you can actually reach back out to your bank, and there's a way for them and the SBA to re-credit you the $10,000.
It's good to know. Thanks for bringing that up. Last one, we mentioned it in an earlier slide, the shuttered venue operators grant. Megan, what can you tell us about this?
Yeah, so this is actually a pretty lucrative grant. Basically, it's brand new. There's like a one-pager on it so far, and so there's not much guidance here yet. But essentially, they're saying take your this is for people who are shuttered venue, meaning they shut their doors and they still are struggling to open up, and definitely haven't opened up to full capacity. And so during 2020, they likely were totally shut down. And so they're taking those and saying, take your 2019 revenues and compare your 2020 revenues. And they kind of have a priority system. If you have a 90% or more reduction in sales, then you're going to be prioritized first in this program. And then 2 weeks later, they'll take you if you have like a 70%, and then 2 weeks later, if you have a 50%, but reduction in sales. So, but the lucrative part of this is that you get to take that money that you had as sales, and you get 45% of 2019's revenue. That's crazy. And so it has nothing to do with your spending. As far as the calculation goes, it is 45% of the revenue, at least how they're saying it now. They may very much come out and have all kinds of guidance about exactly what that means, and be very restrictive, like maybe it's ticket sales only or something. Like they could be very restrictive on this, but the idea is that this is for that industry that they had to shut down, and they couldn't adapt. Restaurants, most of them figured out a way to adapt to have curbside stuff, but these guys couldn't really do that. And
nobody's going to the movies, nobody's going to the
yeah. So we don't know more about it yet, but it will be beneficial. And then they already have promised a round 2. So if you get this and then several months later you're still not open, you can do it again there. And then the last thing to know about this is it is restricted on how you spend the money. So you are going to be required to report on how you spent the money. But it is not considered a loan. It is considered a grant. So it's not like loan and then forgiveness, but it is a grant, but there's a stipulation that you have to spend it on approved ways, which are operating and wages based things.
Gotcha. So some final questions here. Question I had the other day, and Joe, this is probably a good one for you. Does somebody have to have received forgiveness for their round 1 PPP to apply for the second round?
The answer is no, but unfortunately the SBA's actions have caused confusion. So the one requirement is that you have spent all of the loan proceeds from PPP1 before you can receive proceeds for PPP2. That's the one specific requirement. However, the SBA has decided to place like some review holds on some applications at their own discretion. And we're finding that a lot of the ones they're placing reviews or holds on are ones that have not been forgiven. And in those cases, they will likely request additional information. But technically, you don't have to have received forgiveness or even applied for forgiveness to get a second loan.
Gotcha. Well, here's a question that relates to that. Could somebody go, let's say somebody didn't get their first round PPP, so they go do a round 1. Could they go and do round 2 8 weeks later, right?
Wow, Stephen, that's a great one. I hadn't considered it. I imagine, yeah, if funds are available for another 2 months till the end of March, you may be able to get a first round.
Use it early.
You use all the funds over the next 8 weeks if you want to use an 8-week covered period. Once those funds have been depleted, apply for a second round. Yeah, I would think that would be available, but I'll look that up.
I've kind of thought about this because yeah, we've had that question several times, and I don't know if it's going to be possible because by the time you receive the funds, it's probably 2 weeks out from today. Even if you went out and applied today for round 1, maybe it's 2 weeks before you get the money. Then your 8 weeks goes into April, and you've already kind of passed the time frame. But you do attest to I have or I will have. So if the SBA is willing to approve your round 2, they're just going to withhold the money. Then that may be a legitimate way to go. The second thing is they're probably, if the money's not gone, they'll extend it. They'll extend March 31st on, a few more months, and that will allow for more time for you to be like, yeah, I can spend and I can even submit my forgiveness and then get round 2 and all in this year. So,
Megan, we've had many months of working with clients on PPP loans. What are like the best practices / worst practices you've seen as you've talked and advised clients on how to use that money? A lot of companies, for example, if a company's tight, if the revenues are way down, right? Do you bring everybody back? Do you just kind of, stretch it out? What are you seeing as some best practices, particularly for those businesses who just have had major sales losses and have had to reduce their payroll?
Yeah, so we have some who are like, oh, I get the money, I just have to spend it, right? And so then they go and give like 8 people a bonus and spend it all out. And then they're like, okay, we spent all the money. And then they're like, now we're sending everyone on unemployment. And so what they didn't realize is that they created an FTE problem for themselves, and they created a possibly a limitation on employee by employee, that you only get that annualized $100,000. And so whatever week period that they're using, you annualize that to 100, and that's your limit per employee. So if you've gone and spent all this money, well, you all of a sudden don't have the costs to be fully forgiven. And so we've definitely advised against that a few times, because that's been something that people have thought, well, I'll just get this over with and just give all this money out, and then they can go get unemployment. But the other thing is, for those who are really struggling, it's still a risky thing to just all of a sudden bring everyone back. Technically, that's what the funds are supposed to be for. They're supposed to be to rehire your people and keep going. but it doesn't mean you have to rehire everybody right now. You can build that up. So I would recommend you kind of bring back your key people or take care of the key positions, and then and kind of watch. You only received like 10 weeks worth of pay, and you have 24 weeks worth to pay it out. So you can spread that out and take your time. And then honestly, you only have to hit that 60% mark, right? So you don't have to spend all 100% on payroll if you really don't have the operations intact. You're still shut down from COVID. Spread that out, and the bank won't like it, but they will go do the due diligence and do all the requests on all those non-payroll costs when it's time for forgiveness, if that's what you need to achieve full forgiveness.
I mean, you want to be smart. You want to have a plan, right? I think that's, we had a couple customers, had one who they had to ratchet back big time. And then one of the owners withheld payroll, and we're having to like turn over every stone to identify that how to get them forgiveness. So if your goal, you're kind of having to balance these competing goals: staying in business, getting forgiveness. Personally, I would say your ultimate goal should be stay in business. And then, obviously, if you can get full forgiveness as a vehicle to do that, obviously that's what you want to do. But don't just get the loan and say, okay, let's just keep doing what we're doing. Have a plan, be smart about it, work with a good accountant if you don't have one in-house to strategize that out and get through this time frame. All right, final question, kind of completely out of the topic, but we've got some experts here. What are you guys' predictions? If a customer is saying, how long should I plan on an economic downturn? What would you tell them? Maybe I'll start with you, Joe. As a banker, what would you recommend somebody to plan for in terms of before we see the ability for the economy to be back to some level of normalcy?
Well, that's pretty subjective, but Anthony Fauci has said that he wants to vaccinate all the students before school. And obviously people have probably seen that only 20 some odd million people have been vaccinated in the US. So it really just depends on that. But I would think that we're not going to be out of the woods for another month or two until we find out how quickly these vaccines will roll out, and if the AstraZeneca and other vaccines will cover any strains that may be coming from Africa or from Europe. But I think we're in pretty good shape. I don't think banks are too worried. We won't be too strict with our lending standards or too difficult to get money from. I think we'll lend as if the market and the economy are going to be recovering quickly.
Megan, what do you recommend to people, like as they're planning their 2021? What do you advise them?
I mean, definitely, it's still going to have. There's going to be a lot of aftermath. So what we've been focusing on is, what is the good that you learned? Like, you probably took some things to the cloud that were originally on paper because you were used to being in the office all the time, and now you had to take your accounting to the cloud, or you had to take your sales process to the cloud. Those are great things to capitalize on and not things to revert on. You don't, normal does not mean back in the office pecking away at your desktop computer that's there. Normal is now looking forward. What are the opportunities in front of me? What can I do to adapt still? It doesn't have to necessarily be a COVID adaptation, but what am I adapting to around me? So it's helped a lot of people look up and be more creative. And we're trying to advise our clients to stay, like, keep that creativity there, grow your business, do things that are exciting, that have, been rewarding over, things you've learned that have been rewarding over this huge pandemic. And so those are the things that we kind of focus on. I think we are going to be more towards the summertime before we feel like things are normal. And but I am optimistic on all the progress that the vaccines have had and the success that they've had. I am optimistic. I think it'll be faster than we think, but also it's going to take some time still to normalize.
Yeah, and my thoughts are, having gone through the Great Recession and the dot-com blow up and 9/11, the recessions tend to the actual technical recession downturn is shorter than you think, but the recovery is much longer. So I believe that the way we're tracking at the end of the year, you're going to be good. But then there's going to be all this recovery of the economic damage that we've experienced. I'm hearing multiple years before we get back to the employment levels that we had pre-COVID. And so, if you look at these programs, this is about capitalizing your business as much as possible. If you look at what big businesses do when things get tight, they go and they raise a lot of cash, and they use that to not only get through the downturn, but for be able to fuel the recovery that comes after that. All right, well, with that note, Garrett, why don't you take us out?
All right. Thank you, Stephen, for moderating, and thank you, Joe from Continental Bank, and thank you, Megan from Squire Company. It's good to have people like you in the world that can plow through all of that and keep the rest of us abreast. So if you've got any questions that weren't addressed here, or you're too timid, you can email contact us at siliconslopes.com, and we'll forward those over. And it sounds like we may do another one of these in the coming months. We will obviously promote it in all the same ways. And again, appreciate the moderator and the panelists, and have a great evening, everybody.